When a bank approves your loan, it does not hand over other people's savings. It types brand new money into existence. 97% of all the money in a modern economy was created this way. Keystrokes, not printing presses. The cash in your wallet is the rare exception. Almost everything you call money is just a number in a bank's database. In 2014, the Bank of England published a paper quietly admitting how money is really made. Almost nobody noticed. The admission overturned what most people believe, that banks are middlemen, taking in savings and lending them out to borrowers. They are not middlemen. They are manufacturers. And what they manufacture is the money supply itself. To understand how private companies got this power, go back to 17th century London and a handful of goldsmiths running a quiet scam. A scam so useful that instead of banning it, the world built the entire global economy on top of it. In the 1600s, wealthy Londoners stored their gold with goldsmiths, who had the strongest vaults in the city. The goldsmith handed back a paper receipt. Soon, people paid each other with the receipts themselves. Paper became money. Then the goldsmiths noticed something. On any given day, almost nobody actually came to collect their gold. So they began writing receipts for gold that did not exist, and lending those receipts out at interest. Fake receipts, real interest. The goldsmiths were earning money on gold they never had. This was the birth of banking. Siebler Neumark. It worked until too many people knocked on the vault door demanding real gold. The bank run has haunted the system ever since. But here is the puzzle. If the whole structure rests on receipts for nothing, why hasn't it simply collapsed? The answer is that something invisible holds it up. To see it, watch what happens when you sign a mortgage. You borrow $300,000 for a house. The bank does not transfer $300,000 from anyone's savings account. Instead, it types a new deposit into your account and a matching loan onto its own books. 2 entries, seconds apart. That deposit did not exist a moment ago. Nobody's balance went down. The total money in the economy just grew. The Bank of England confirmed it, and Germany's Bundesbank agreed in 2017. Loans create deposits. The textbooks had the arrows backwards. And the reverse is just as strange. Every time you repay a loan, that money is destroyed, deleted from existence. The money supply breathes with lending and repayment. In America, cash is roughly $2 trillion. Total money is over $20 trillion. Which raises the obvious question, the one that should keep you up at night. If banks create money by typing, what stops them from typing themselves rich? Why not create money forever? The first break is that every loan is a risk. If the borrower defaults, the bank eats the loss. Losses come out of the bank's own capital. Run out, the bank dies. After 2008, Basel III rules demanded more of it. The second break is demand. Banks cannot type new money unless somebody credible walks in and asks to borrow it. The third break is the central bank, which sets the interest rate that makes lending cheap or painfully expensive. Raise rates, borrowing dries up, money creation slows, cut rates, lending surges, the supply swells. That is the throttle. You may have heard of a fourth break, the reserve requirement. Banks keeping a fraction of deposits on hand. Here is what almost nobody knows. In March 2020, the United States quietly set that requirement to zero. $0 required. The system now runs on capital rules, profit motive, and confidence alone. And confidence, as history shows, can vanish overnight. In 2008, the machine ran in reverse, and the world discovered that money can die at scale. Banks had typed trillions into existence through mortgage lending, stacked on borrowers who could never realistically repay. When defaults hit, bank capital burned. Wounded banks stopped making new loans, so new money stopped being born. Old loans kept being repaid or written off, deleting money daily. The supply contracted like a lung, and businesses starved of credit collapsed. So central banks did something desperate. They created money themselves, hundreds of billions, typed into existence, just like the banks do. They called it quantitative easing, using the new money to buy bonds and force cash into the frozen system. Notice what that admits. When private money creation stalls, the state can conjure its own. The keyboard works both ways. Money is not a thing. It is a promise. And the economy is a tower of promises, each typed by someone you never met. Step back, and the picture is startling. The power to create money sits mostly with private, profit-seeking companies. Banks decide where new money is born, which businesses, which neighborhoods, which countries get credit, and which do not. Lend to factories and new money builds things. Lend against houses and it inflates prices. Nobody votes on that choice. The goldsmiths scam was never shut down. It was licensed, regulated, and renamed. We call it the banking system. And it survives on the same fragile fuel as those first paper receipts. Your belief that the number is real. So the money in your account is not gold, not cash, not even a thing. It is a bank's promise to you. A promise that was typed into existence and can be deleted the same way. That is money out of thin air. Governments can run the keyboard too, and when they overdo it, money rots. That rot is called inflation. That story is next.